Hey there, neighborhood board members. This one is for you. If you serve on a condominium association or a homeowners association board of directors, you have a big responsibility. Today I'm going to share a few key things that you need to know about your master condominium association insurance policy and a couple of smart ways that you can potentially save some money without sacrificing the coverage. Let's start with the property insurance. Your master condominium association policy is designed to provide coverage on the buildings that the condominium owns or the common property that the community has, such as it could be your buildings, it could be a clubhouse, your pool, you could have fencing, you could have other commonly owned property in the neighborhood that the association needs to provide the insurance on. Oftentimes when we are working with a new association, we find it's common that the property values are underinsured. Many association insurance policies have not kept up with the skyrocketing cost of construction, repairs, or replacement. This is a potential major gap in coverage for your neighborhood, and it's not a problem until you experience a claim and find out that the policy does not have adequate limits of insurance on your property. We always recommend that you have some sort of replacement cost appraisal or replacement cost analysis of your property at least every few years. One of the services that we provide at our agency is actually going on site to your association, taking a look at all the property, doing updated replacement cost analysis, and discussing with you the importance of having adequate property coverage. A second very key component of your master association insurance should be directors and officers liability coverage. Even though as a board member, most of the time, you are a volunteer, that still comes with some significant potential liability as you make decisions as a board for the entire neighborhood. You could have disputes with individual condominium unit or homeowners in the neighborhood. You could have contract disputes with vendors or contractors doing work in the property, or even possible lawsuits such as like discrimination, fraud, etc. And all of these types of potential litigation land at your feet as the board of directors. A directors and officers liability insurance policy gives you protection as a board member in case one of these lawsuits are brought against the board or you individually as a director of the board. So it is very important that this is a type of insurance that is included with your policy and that you have an adequate limit of coverage. Now here's a quick money saving tip. Higher deductibles equals lower premium. Now, when you think about your homeowner's insurance or your car insurance, oftentimes higher deductibles seem like a risky proposition for you to have on your policy. However, with a condominium association or a homeowners association where you're often talking about significant limits of insurance that you have, comes along with a significant premium. A lot of times we see associations that have $10,000 or $15,000 property deductibles, but they don't necessarily understand that if you can increase your deductible to $25,000 or maybe even $50,000, that can lead to significant thousands of savings in the annual premium that you pay. Now, of course, if you do suffer a loss, you're going to have to pay that deductible first. But one thing that's sort of unique to condominium or homeowners associations is that you have the ability to do assessments to the unit owners. Now, unit owners necessarily aren't going to be very happy about having an assessment, but if you suffer a major loss, that such as wind or hail or fire or something like that, that's going to force you to have to pay that deductible, you can, if the unit owners have loss assessment coverage under their homeowners policy or under their condominium policy, that can be a way where essentially you're offsetting that deductible risk with the unit owners that have their own condominium policies. Now, here is a second option. If you already have high deductibles for the association insurance and you still feel like you're paying a ton of money in premium, more than maybe you should, Here's another potential option to think about. Present your agent or the insurance company that you're working with a maintenance plan on your property. Insurance company underwriters will be more willing to negotiate with you and give you more favorable terms on the coverage and the pricing if they feel like there is a proactive board of directors in place at the association that has good management. Showing them a plan. Hey, here is our 5-year plan to replace 3 or 4 or 5 of the roofs in our association. This is our risk management strategy with dealing with contractors who are coming on the premises. Or here is our list of safety equipment and our everything that we have around our pool and our clubhouse and our signage and everything like that. Really having risk management in place goes a long way with an insurance company underwriter. And when you're shopping the market, being able to include this with the application will ensure that you're getting the most favorable terms for your neighborhood insurance. Here at the Briggs Agency, we help neighborhood associations like yours reduce risk and manage their insurance premiums. If you are not sure if your association is protected correctly, or if you feel like you are way overpaying for your insurance, we would appreciate the opportunity to give you a second opinion. We're happy to meet with your board of directors on site to discuss the options and give you a solid proposal. Thank you for watching this video. Thank you for serving your community. Reach out to us at briggsagency.com or give us a call.